Hello, welcome to Be the Boss of Your Money. I'm Mitch Goldberg, your host, and this is my live stream all about personal finance, which covers so many things from personal finance, investing, banking, credit, debt, you name it, we're covering it here. Today, we're going to talk about my favorite topic, stock market. We're going to talk about the big earnings week ahead. I'm going to show you some of the highlights to look for. Tesla just announced a blowout quarter. Stock is off a little bit in aftermarket trading. We'll take a look at why that happened, and we're going to have a really good show today. So stick around. I'm going to roll a quick intro. This is how you roll the intro, right? Just like this. You ready? 1, 2, 3. Thank you so much for joining me. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. Welcome. Your time is very valuable, and it means a lot to me that you chose to spend some of it with me. If you have any questions about personal finance or certainly the subject matter that we're going over today, ask me in the comments. I love hearing from you. It's the favorite part of doing this. If you're watching in the replay, same thing. Welcome. I'd love to hear your questions or see your questions in the comments. And words of wisdom and cheering on are always appreciated as well. Today, we're talking about a couple of things. It's Monday. If you didn't know, the day is over already. It just flew by. But this is a super busy week, the busiest week of the quarter of the Q1 earnings announcements. And you've got just everyone who's somebody. Last week was all about the banks. This week is like everybody else is reporting. We've got a lot to keep track of. So I want to give you an update in the market. I want you to not just get an update in the market, but to get some perspective. So while you're watching this, if you want to give me one of these, a reaction, that would be super cool. And I'll see who you are. Let me know where you're watching from. Are you watching from my neck of the woods? Are you watching from another part of the world? I'd love to see that. Let me make the screen bigger before I take you there. And here we go. And we are on screen 4. Here we go. So let's just take a look here. Okay, the Dow off 61 points. The juxtaposition here, I think that's the right word here, is that the Dow is down, struggled all day for any kind of momentum. I mean, down 61 points is not exactly a big deal in a Dow that's just about 34,000, but it is under 34,000 today because of the down 62 points that it had today. NASDAQ was up almost 90 basis points, up 122 points. Pretty good day. S&P was up the same percentage as the Dow was down, but both of those are basically flat. Gold just about flat. You know, it's cool. Gold is up 18 tenths of a percent. Same with S&P, and the Dow is down 18 tenths of a percent. That's a pretty tight variance in there. Okay. By the way, the S&P 500, the NASDAQ, the Dow, these are indexes. You can't invest directly into an index, but you could certainly invest in a security that tracks or mimics an index. I'm getting really good at saying that. Steve is out there. Steve, good to see you, my man. Thank you very much for joining me. Okay, so oil kind of flat, the 10-year kind of flat. This is just about as boring and quiet of a day as I've seen. And I don't know. I feel like since the pandemic started, today's probably the quietest day that I can remember. That's okay. It helped me get a lot of things done that I needed to get done. You know, it's not just about stocks, it's about the planning, okay, and all that. You know, if you go down to the transportation, utilities, the NASDAQ 100, S&P 400, Russell 2000, Russell 2000 was the best performer of the day. That's RUSS2K. Small cap stocks. Small cap stocks, just so you know, small cap stocks are typically, you're talking about companies, you know, under $15 billion in market cap. And the smaller companies are typically more sensitive to the U.S. economy, to the domestic economy. So when they start rallying, I'm talking like a real trend. That is positive beliefs, expectations that the U.S. economy is improving. And when they pull back, it's the belief that things aren't improving domestically. The large cap stocks, they get more of their numbers. About half of their revenues come from overseas. Okay, so they're obviously more global, the bigger companies. All right, so let's take a look at crypto. Okay, we're going to take a look at crypto. I used to not go over crypto every day here. It was just something that if crypto was in the news, I would I would go through crypto, but I go through crypto now every day. But Bitcoin, this is the big one. Okay, Bitcoin was up 8% today, which is a big move. It closed at 53,000 and change. Given the magnitude of a 64,000 to about $46,000 over a weekend, that was a pretty big move. But crypto is very volatile. That's what we say. Crypto is for people who are really have the wherewithal and the means to speculate. Yes, I know there are. It seems like everybody now is all of a sudden a Bitcoin or Dogecoin millionaire. It seems like everybody on Instagram is all of a sudden, has a multi-million-dollar net worth. I don't know where that comes from, but I think there's just a lot of hype in this stuff. So let's keep going on. Let's take a look at Tesla. Tesla posts record net income of $438 million. Revenue surges by 74%. Here's the thing, though. Okay, let's just take a look. What I read here, they didn't sell any new Model S's or Model X's. They're selling them, but they're selling them from inventory. They're not actually. The deliveries of those are very small, but 184,000 Model 3 and Model Y cars is their big thing. So you could see Tesla has really gone downscale from the $100,000, $95,000 Tesla down to the $35,000, $40,000, $45,000 Tesla. Okay, and I'm starting to see those Model 3s all over the place. They are one good-looking car. I'm sorry to scroll through this so quickly. But Tesla's facing more competition in the electric vehicle business. Major automakers, VW, Audi, Ford, and don't forget GM. I don't know why I didn't say GM here, and BMW, and Mercedes. But everyone's coming out with really nice electric cars. I was just saying to my wife, our next car may look at that facial hair on Elon Musk. How come the screen is kind of stuck? It's not scrolling. So I'm talking to you about this while you're looking at that weird beard of his. I kind of have to shave. I need a little shave. Maybe I'll just leave this over here, and be like, Elon, that'd be pretty cool. Minus the $80 billion net worth. But just thinking out loud. Thinking out loud could be a dangerous thing. So let's move on. Let's take a look at how Tesla's doing in aftermarket trading. Okay, Tesla down $23 in aftermarket trading. Doesn't particularly bode well for the risk on assets and the fact that NASDAQ had a pretty decent day today. We'll see how that impacts the market tomorrow. But that's something, when you have a company that comes out with such strong numbers in terms of deliveries, earnings, and revenues, people get upset. It's not good enough. And I think that's a big part of the problem. We've been talking about this for the last few weeks, that earnings expectations are so high for so many companies that when companies finally do report excellent results, excellent quarterly corporate results, they're just not good enough. And it just becomes a reason to sell on the news, right? So that's what's going on with Tesla. What I was going to show you is that Tesla is, let me put that up there. So Tesla, you see that Tesla down $21.50 a share. Tesla is not doing great on service. They haven't invested in service vehicles, and people are waiting longer and longer to receive their cars. So Tesla's got some work to do, and I guess the concern is that the bigger automobile companies from Ford to GM and everybody else, once they start delivering a lot of electric cars, which is expected over the next, year or two. And there's a bunch of electric cars now. Volvo has one, but you have dealerships all over the place and places to go to for service. So that might become, the lean model of asset light of Tesla might now become a liability if they can't get their service up to par, right? Okay, so let's take a further look at the FANG stocks today. Amazon, big day, up $68, not far from its all-time high. Netflix barely bounced from its drubbing last week. Facebook continues to hold the $300 level. We'll have to see. Apple came out with a new product that changes privacy on their phone, and it might be a problem for some of the other companies like Facebook. We'll see, but Facebook didn't react too badly today. Google up $10. Apple, Microsoft. Look, when FANG is up, you can understand why the NASDAQ would be up and why the S&P 500 would hold up. Let's take a look at the S&P 500 sectors. These are the ETFs that represent the 11 sectors of the S&P 500. So if you have any questions, folks, just hit me up in the comments, by the way. But energy is the leader today. We spoke about energy last week. Tom Lee of Fundstrat says he sees energy going up another 45% as a sector. Sounds good to me. We talked about some of the benefits of owning energy stocks. And I know what you're thinking. We're talking about electric cars. There's going to be lower and lower demand for surface fuel. But the energy industry has also changed a lot. And we're not getting rid of combustion engine cars that fast. The whole world is not going battery operated so fast. It's accelerating in the United States and China. Yes, I'm not debating that at all. Okay. Building materials up, technology up, financials, that's what you want to see. But industrials were down, consumer staples were down. I don't read anything into this except that these sectors, have been up so much already. So it's not, it's not a surprise that they back off a little bit. But like I said, the moves today were pretty measured. There weren't any. I didn't see any like major disasters today. I didn't see any takeovers today either. Just a quiet day, and maybe we're getting into summer mode. Some of the things to watch out for that investors are on their toes about are inflation and profit margins. If corporations can't raise their prices, then they have to absorb inflation in the cost of their goods. If they could raise the cost of their products to consumers, well, then we have to worry about consumer inflation, and that puts the Fed back into play. And investors will say, yes, I know people are investors, but investors will say, well, maybe the Fed does have to raise rates or stop buying so many bonds in the open market and get off their duff and maybe tighten up a little bit with monetary policy. So we're just going to go through this back and forth, this the yo-yo thoughts of good to bad, easy to hard, constantly, and I expect that to remain until we clear up a few things. And over the next couple of months, we'll have a much better visibility on inflation, on interest rates, on whether or not the strong economy will continue into 2022. I'm pretty confident for 2021, but I'm now thinking more in terms of 2022 because prices of stocks are up so much. And these are some of the things you have to take a look at. So let's take a look at what's coming up this week. Okay. So first of all, let's look at tomorrow because we already saw the big Tesla numbers today. So let's take it to the screen. So I'll go up here in the upper right-hand corner. Just makes more sense. There's a big gap over here. All right. So you see that on the screen here. Tomorrow, UPS looking for $1.63, some growth there. GE, we're looking for a penny a share. GE is definitely one to watch because I think so many people are getting into GE, for the turnaround, for the big, for the big recovery in wind energy and aircraft. Just we'll see, but there's a lot of money already into GE, so we need to see what things look like. But I'm rooting for GE. I hope I'm rooting for everybody. Just so you know, 3M is another heavyweight. So I look at this stuff, and I know more or less what the earnings estimates are for every company. It doesn't mean that every company is going to have a pop every time they go up. And I don't want you playing these companies for the earnings play. There are ways to play it. Some companies, we'll talk about how to play earnings. Okay, there are some companies that tend to have very exaggerated big moves on earnings announcements, and you'll typically see those with the Google, Alphabet, with the Netflix. And I don't really advocate for most people, the overwhelming vast majority of people. I don't encourage making investments based on short-term earnings announcements, like you're going to buy a stock, it's going to get a pop, you're going to get out, you're going to go home happy. Because what we're seeing in this market, a lot of companies that have beaten earnings expectations and revenue expectations, and have even raised guidance for the next quarter, are still going down. But if you must play earnings for a stock, if you really think that you're onto something, a better way to go would be something that I call a straddle. It's called a long straddle, where you could buy a call money above the strike price, so out of the money call, and a put price below below the strike price that is closest to where the price is now. Same thing with the call. And what you're doing is you're playing for volatility. So typically what happens is you expect the stock to go either way up, or way down. And when that happens, you get this exaggerated move. And typically the option that is favored by the move will move more than the option that is not favored by the move. So to the upside, if companies are below an earnings report, you might see the call maybe go up 40-50% in value, but the put you bought might only go down 20 or 30% in value. You sell both and you pocket the difference. That's a long straddle. So if you're going to play for big earnings moves, I do think that is not a bad way for those of you who are suitable for options. Does that make sense? Okay, so I think we've gone over everything, but the big numbers tomorrow: UPS, GE. Let's get back to sharing the screen. Okay, let's show you what I'm looking at. UPS, GE, 3M. Lilly's been up a lot. We'll see. JetBlue, we'll see, because we want to see if the work from home, the rotation trade continues. PACCAR, there's some big heavy duty industrials in here, but Google is the one I'm looking for. And I think they're coming out tomorrow. So yeah, that'll be the big one. Yeah, I'm kind of flying through this, but wish I would let me alphabetize this. But Boeing on Wednesday, that's a big one, because a lot of people are betting on Boeing, and a lot of people are rooting for Boeing. A lot of people are betting on that to see if there's translation from more people flying and aircraft getting ready to order. Boeing did receive a lot of aircraft orders in the last month, but we want to see if that's just a one-time blip, or if the airline industry is really ramping up orders because they expect global travel to return. I do expect global travel to return. It's just really a matter of, for Boeing, for investors in Boeing, is how long is it going to take? If they miss the quarter, I wouldn't get upset about it. I could wait for the next quarter, or the quarter after, or the quarter after. I'm a long-term investor, so to me, it's not going to really matter. We'll see Discovery and see what happens. They got caught up in the Archegos leverage sell-off, the unwinding of the Archegos hedge fund. So that stock went from like the 70s down to the high 30s. Okay. Anybody else in here that we should be taking a look at? I'm really looking for the big companies. No, not really. We could keep going on. All right. So that's it. That's my story for the day. This is just a wait and watch kind of day until we see the kinds of earnings quality and revenues quality we get for the rest of the quarter, and to see what companies have to say for the next quarter and for the second half of next year. By the time we do get to the second half of next year, all anybody's going to be thinking of is, what about 2022? And then people are going to wonder, is all the stimulus and the $1 trillion, $2 trillion packages that have been delivered into the economy, injected into the economy, all people are going to wonder is that going to wear off soon? And we're just going to get back to pre-pandemic baseline growth of low, steady growth, low, steady inflation, low, steady unemployment, which, by the way, is a pretty good environment for investors. Okay. I'll speak to you guys tomorrow. If you think of anything you want to ask me, if you think of it later, hit me up in the comments. I'll be sure to see it. Thank you very much.